does the suspension of World Bank loans mean? The World Bank last week took the tough step and suspended funding projects in Uganda because the country has simply failed to use a bulk of loans it has taken from the bank. Over 1.5 trillion shillings borrowed from the bank has been lying unutilized and gathering interest. So the suspension in a way is an act of mercy. President Museveni has been reported to be very unhappy with his ministers for the state of affairs where the government borrows huge sums of money which it fails to use, attracting punitive interest. So what makes a country borrow money it cannot spend? Ever since Uganda's debt, which was approaching unsustainable levels, was forgiven about a decade ago, foreign loans are supposed to be contracted with a lot of care and scrutiny and need to be approved by Parliament after it is convinced the loan is inevitable. The loan was then approaching $5 billion, but since it was wiped away to nearly zero, it has since grown back to exceed the last amount which was forgiven. The reason given for not using the borrowed money is that the country lacks absorptive capacity. This means that the local conditions like materials, land and Uganda shillings needed to work with the foreign component of the project are not ready. Can the government then negotiate a loan and convince Parliament when the conditions for utilizing the loan do not exist? In many cases, the feasibility studies are not properly done. In others, corruption sets in to mess up everything. For example, if the project requires acquisition of land, individuals with inside information acquire the earmarked land and connive with officials to inflate its value, making it impossible for the government to compensate them in the projected financial year. But how will the suspension of the World Bank funding affect Uganda? The World Bank is the central coordinator of the country's donors. The suspension will therefore affect Uganda's relations with other international and institutional donors. Besides lending, the World Bank provides grants and carries out a lot of development studies and research work in the country. The suspension therefore has very wide-reaching implications. Uganda can therefore not go to the EU countries to negotiate funding if the World Bank funding is frozen. So what is the way out? This is simply a call for seriousness in project planning, implementation and management. But it will also call for the country's reviewing of its funding for development projects, but also its recurrent budget because it has been getting what is called budget support, which often goes to administrative costs. The easy way out in the short run, but which is crippling in the long run, is to turn to unprofessional lenders who do not insist on disciplined management of the borrowed funds.